Hey everyone, I hope you guys are having a great trading day today. I took two trades earlier that I posted on my Twitter account, one being on EU and one being on S&P. And I took those earlier. I got out and I am done for the day. I'm done for the day. Why? Because there's no news today, nothing to inject volume into the market. And two, because it's Monday and there are some Mondays that I simply do not trade at all. And so I took two today, but haven't taken anything since the 9:30 opening, and I'm just sitting here on the sidelines. I got two messages earlier on Twitter, got two questions, and so I want to cover the answer to that question. They were both basically the same question, worded differently. So I want to cover that on this video and hopefully shed some light on this topic, because maybe some of you, there may be some of you out there that I don't want to say have fallen into this mindset, but I just want to make sure that you're not falling into this mindset, I guess is where I'm going, and you'll see what I'm saying in a second. So having said all that as a framework, when you guys get ready to trade each day, I hope you have framed an overall bias for the day before you begin to sit down on your charts, meaning asking yourself, where is the market going? Where's price going? And where's price likely to draw to? Where is your overall draw on liquidity? You need to have that kind of framed out in your mind ahead of time, I hope, before you sit down and look at your charts overall and begin your trade. So whether you trade gold, whether you trade GJ, whether you trade US 30, Nasdaq, EU, GU, whatever it is, what's your overall bias for the day in terms of movement? This is what I ask myself daily. This is the framework that I kind of base everything around. And so I wanted you guys to just make sure you are doing that as well. So having said that, something happened today on the Nasdaq, and I'm hoping that people didn't fall into this, because it was a great setup, but she turned around and bit somebody hard. I know somebody had to have fallen into this, so that's why I wanted to create this video and talk about this. I guess there's so many things going through my mind. I'm not sure where to start, but also I'm just kind of let it go as I'm talking here. First thing is, I don't want you guys, I know you might be excited to use the candle filter. You've tested it out. Maybe some of you are using it now, but I don't want you to get into the mindset or the framework that you can use this on every liquidity sweep. It's not the end all be all. It's not 100%. And there are some times when, even though there is a liquidity sweep, it happens, the movement's going to keep going, and that's exactly what happened today on the Nasdaq chart. So I didn't take it. I'll explain why I didn't take it, but that's the overall message for this video, is just don't get wrapped up in liquidity sweeps everywhere, because I think some people are doing that. If you are doing that, please back out of doing that. It's a great model. It's beautiful. It's not 100%. If you took a loss today, you hit your stop loss, shake it off. It's okay. There's going to be other great setups coming, but I will explain why I didn't take it today. Even though everything looked great, it looked like all the criteria were there, except one for me, and I'll go over that real quick. So we're looking at the Nasdaq chart here. You open this up, and I'm on the 15-minute here. And I begin to look to the left. Obviously can't look to the right, nothing going on here. So I'm looking back, and I'm seeing where are there areas of liquidity that still need to be taken. So you could mark up this area, but if you look, and I'm just going to shoot this line through here. If you look at that, and I'm going to hit it here, this happened on Friday. So it swept this area, came back down, and did its thing. So really it's nice to show that, but kind of really invalid at that point. So I'm going to go ahead and knock that off. Just kind of blowing my chart up here. I'm using went ahead and extended the resolution to 4K on the monitors here, so that's why things look a little different here. It just gives me more room to see. So anyway, having said that, I'm going to grab my area. So I see another area here. I'm going to mark that off. And then there's another area here. So I've got liquidity here. This one's already been taken over here. And then I've got this huge area of liquidity right here. So you go ahead and you mark those up, or this is what I do. I mark those up on my chart. And then I may drop down to the lower time frame and the 3 or 5 minute and hang out from there. But at least it's marked up, and I've got some annotations here that I do on, I may put 15-minute liquidity area or something similar to that. But anyway, I've got this marked up. And so the day takes off here. You got the 9:30 opening here, 9:45 candle. You got the 10 o'clock candle that happens here, but it doesn't sweep under that liquidity, so you can't really utilize the rule for the candle filter, so you keep waiting, and you've got this candle here that comes under it, closes under it, so you get excited, and you put your fib on it after it closes, and then you wait. So this candle right here, make sure I'm marking this right, this guy is the 10:30 candle. This is the next 15-minute candle that starts to form right there. So let's go ahead and let's jump down to the lower time frame. I'm on the 15 here. And this, if I remember correctly, yeah, this is your 10:30 candle. So he starts dropping, get a little tick back up, get a huge push down, and it comes back up, and you're like, okay, great, here we go, here comes the movement. You get your hand on the trigger, or maybe you get your sell limit ready to go at whatever level you want. Some people do it at 0.5. Some people are 6.8 or 61.8 or 62. You got those set, and it pushes through. It's going higher, and now you're starting to sweat a little bit. And now you're at the 1 level, and it keeps going and stops you out, and you're scratching your head like, what in the world just happened? So let me explain my 2 cents, my opinion here. So even though it looked great, I saw it, I put the fib on it, I looked at it, but again, for me, my overall bias for the day was bullish for EU, for Nasdaq, and for US 30. And when I saw this, because, well, 2 things, because it would have come back up here near the equilibrium area and into my premium area, I didn't take this at all. But the primary reason is because if you look back, let me jump back to the 15 real quick. If you look back at the 15-minute chart, there's this huge draw on liquidity up here. And then, so when this happened right around here, this is at the 15,940 level here on 8 cap, this huge draw on liquidity is only 40 points away. So I thought there is no way, even though she does it every now and then, I thought there's no way that it's gonna, even though you swept this area, it's not just gonna turn around and come back down when it's got this area of liquidity that it wants to go to. Remember, guys, as ICT has taught and teaches, liquidity will go to liquidity, and it does that all day long. What's the other phrase? And it does not stop. So liquidity to liquidity, or in an imbalanced area, and because it was so high already with this draw on liquidity, again, in my opinion, with this draw right here, this is one reason I didn't take the chart. But as it happened, I was sitting there thinking, I hope somebody didn't get excited and jump at this without looking at the overall big picture of things and didn't get slam dunked, right here, which I think that's what happened to a few people. So 2 points with this, guys, is you just make sure that you're looking at the overall big picture of things. Where is price likely to draw to? Where is it going to go to? And the other thing is just do not get, I know you may be excited. I've heard a lot of excitement, and it's great, and I love this as well, but just don't get wrapped up in the mindset that you can take liquidity or take these sweeps everywhere that they happen. So here, here, you got liquidity down here, this area here, here. When you mark up your areas of liquidity, just watch where you're at, because the post that I posted on Twitter the other day, there was a post about internal liquidity and external liquidity. To me, looking at this chart, and I'm hoping it's okay to see being in 4K here, to me, this area right here is external liquidity, and this is external liquidity. All of this through here is internal. So you may have, sweeps that happen and it comes down a little bit and then comes back up, or vice versa. That's exactly what happened on the EU trade that I took this morning. I was extremely bullish on EU. So when it happened, I got in quickly, and I got out quickly because I thought, sure enough, I'm going to get a little bit and it's going to turn on me. And I ended up getting out, hit my take profit level, my small take profit level, but then it went ahead and went back up. And it was the same for the S&P as well. So just wanted to say, again, don't get wrapped up thinking that you can jump in every liquidity area, because it's just, it's not going to happen. The candle filter is great. It's not the end all be all. It's not a 100% success model. So just wanted to emphasize that and just stress that if you got stopped out today, if you trade NAS and you were using the candle filter and you got stopped out, don't be frustrated. It's okay. There's going to be other great setups that come down the road. We've got news tomorrow. We've got news on Wednesday, and then a very light week the rest of the week, and then of course moving into the month of December. So again, lots of great setups ahead, guys. Just don't get frustrated. But again, not to beat a dead horse, but my point is, don't jump at every liquidity area that you see. Even though a lot of them work, just look at the overall big picture of the chart and kind of see where you're at with things. So anyway, I hope that clears things up. I hope that helps out a little bit. Again, looking at the higher time frames, make sure you do that, guys, because the higher time frames are key. Weekly, monthly, daily, 4 hour, going down from there and just seeing where price is likely to draw to. That's what you want to zoom in on, especially using this model. So anyway, hope that helps out, guys. Hope that clears some things up. Just wanted to take a few minutes and put this out there, and it's great. I'm loving this. I love using this. Both trades this morning were taken using this, but again, with my overall bias, it was a quick get in, get out, and then see what tomorrow brings, because today looked like crap to me, to be honest. Just because there was no news, nothing going on. So anyway, all right, you guys have a great rest of your day. I hope this clears things up. I hope it helps out, and I will catch you all on the next trade. All right, take care, guys.